Hey, everybody, and welcome to this week's episode of the Weekly Wealth Podcast. I'm really excited to have one of our firm's founders, Brian Bogner, on the podcast today on the show. We're going to talk about who we are as a firm, what we do, how we help our clients, and I really hope that you find it to be interesting and exciting. And if you've listened to any of the 120 plus episodes of the Weekly Wealth Podcast, if you've ever wondered what it might be like to have me personally as your financial advisor, I have a really simple process. Go to my website, www.weeklywealthpodcast.com, click on the Contact Us tab. That'll take you to my calendar, and you can set a 30-minute Zoom appointment. And at this appointment, we can talk about some of the 30,000-foot aspects of your financial situation. We can talk about what's keeping you up at night, and we can decide if there are any next steps. It really is that simple, and there is no cost for this appointment. Hope that you enjoy this episode. Well, hey, everybody, and welcome to this week's episode of the Weekly Wealth Podcast. And if you've heard any of the last 120 plus episodes of the show, you've heard me refer to the podcast as we're a financial planning podcast, but we don't necessarily talk about traditional financial planning topics. So what that means is we talk about topics that can enhance your financial position and even help you to have a better life. But today we're going to kind of deviate from that. And I wanted to talk about the firm that I represent. I want to talk to one of the founders of the firm and just learn about his podcast as well. So today we have Brian Bogner of Parallel Financial with us. So, hey, Brian, how are you?
Doing great, David. Thanks for having me here today.
Hey, so for everybody who's watching on YouTube, they could see an airplane behind you, and if you're just listening on the podcast, you'll just have to take my word for it. But tell me why do you have an airplane, a model airplane in your office?
Well, David, I have loved airplanes since I was a kid. My goal in high school and growing up is I wanted to go to the Air Force and be an Air Force pilot. And you can, for those of you watching, you can see me wearing these glasses here. And back in the 80s, if you didn't have 20/20 vision, you didn't fly for the military. And, this was pre-LASIK and all those other cool things that we have now to help us. So my sophomore year of high school, I got really blurry vision and had to get glasses and decided to change course. But thankfully, I was afforded the opportunity a few years ago to get my pilot's license and was able to get a plane. And so, yeah, I use a lot for the business. We've got clients and advisors here over the Southeast, and I get to fly there. And when are you coming up with me, Dave? That's what I want to know. When are we going?
What's interesting is literally about 20 minutes ago, I had a life insurance examiner in here taking some blood, and I just felt like I need a little bit more life insurance and trying to walk the walk. So once that's issued, maybe I'll take a plane ride with you. But until then, I'm not so sure. So did your plane, you and I are about the same age. I wanted to be a pilot too in the 80s, but that's just after watching Top Gun, the first one. So
yeah, no, this again, it was something that just as a kid, I just always was fascinated with and just always wanted to do. So, yeah.
Awesome. Cool. Well, I wanted to kind of just show off the firm that I represent and just talk about some of the things that we do today. A lot of my podcasts really interview other guests that can help listeners, but today I want to be selfish and talk about some of the ways that I and our firm can help listeners. So tell me about Parallel Financial and what made you and your business partner Anthony kind of start the firm, and let's just have that 30,000-foot level of what is Parallel
Sure.
Financial.
Well, let me start with how we started the firm, and then I'll get into kind of who we are and what we are today. Anthony and I worked together at a bank, and I was the portfolio manager. Anthony was the relationship manager. And it was a good bank, and unfortunately, that bank's not around anymore. But it was a good bank. 2008, however, changed a lot in our industry, right? Not only from a regulatory standpoint, but a lot of companies after 2008 started doing things very differently, and our bank was no different. And it basically got to the point where we had a hard time looking in the mirror based on like what we were charging, what we were delivering, the value that we were providing. And we just didn't really feel good about ourselves. And we said, we can do this better. We can charge a heck of a lot less to our clients. We can save them money. We can make them more money. We can just do this a lot better and not be beholden to these massive corporate mandates and structures and things like that. And so in 2013, actually it was 10 years ago in March, this past March, that we stepped away and started Parallel. So we're 10 years old now. And when we started the firm, we had some very specific things that we were going to adhere to, and we still do to this day. Okay. That we were going to be unbiased, that we were not going to be beholden to, because again, when you work for a corporation, they have a flavor of the month, or they have a product or item of the quarter or month or something like that they push down, and they're like, get out there and sell this thing, get out there and get this in front of your clients. And you're like, well, my clients don't need another credit card, or they don't need another life insurance, or they don't need these things. Well, it doesn't matter. That's what you got to do. Let's go. And so when you really think about being a fiduciary and doing what's in your client's best interest, you start scratching your head going, this doesn't feel right.
So you said, like, what is a fiduciary? That's a word that you kind of hear thrown out.
Yeah.
What exactly does fiduciary mean?
Well, a fiduciary simply means that you are required to do what's in your client's best interest. Okay.
But isn't
and that is the
like
standard
a fiduciary? Like, it would seem that anybody in the financial business has to do what's in the client's best interest, or is not the case?
That's a great question, David, because that is not the case. As a matter of fact, at many firms, I mean, so who are fiduciaries? Okay, let's define. Let's take a few minutes and define, like, when we say, okay, you're a financial advisor, right? If I tell someone I'm a financial advisor, it could mean 1,000 different things. Because where am I coming from? Am I coming from an insurance company? If I'm a financial advisor in an insurance company, guess what every solution is going to end up looking like?
I'm thinking annuities or whole life insurance.
There you go. If I'm an advisor from a bank, what do you think a lot of solutions are going to look like? Probably some type of banking product or something related to banking. If I'm an advisor from a broker dealer, what do you think a lot of things are going to look like? Well, there might be like some loaded mutual funds, or high cost investment products or things like that. It's like, depending on where you're from, then typically your solutions will kind of line up in that arena. Okay. Most advisors are not fiduciaries. They're not held to that standard. When you become a registered investment advisory firm, registered directly with the SEC, the Securities Exchange Commission, which is what we are here at Parallel, you are a fiduciary. Okay. Here's the analogy I like to use. All right. Let's take you back, David, to your single days. You're cruising around, their wavy hairs just flowing in the wind, as you're like, going out and about, right? And you go in to buy a car and you're like, I got $20,000, $30,000. I want to buy a new vehicle. And they say, great, we have this amazing minivan right here for you. Okay. And you're like, minivan? Yeah. And it's like $29,999 out the door. You grab your penny, you hop in the minivan and you take off. Well, you could afford that minivan, right? But back in your single days, David, was that in your best interest to own a minivan?
Did not suit my needs.
Yes, it did not suit your needs. But guess what? When it was suitable for you, and that's so what most firms operate in, the suitability standard, and they say, well, he had enough money, he could afford it. So it was suitable for him. No, it was not in your best interest. And you can apply the same analogy to investments and to advice. Is it in the client's best interest in terms of what we're doing? And so when we started Parallel from day one, we're like, we're not going to be beholden to corporate things. We're not going to be under any type of mandates or anything like that. We have the entire universe. We spend so much time doing due diligence on solutions. In our industry, a lot of people talk about products. We got products. We don't have products. We have solutions. And not only that, but we don't get compensated on some type of commission from that solution. Okay. Now I will say we do insurance, and the insurance industry just is what it is. And it is a commission-based industry. That's what it is. But when we do insurance for somebody, it is done the right way. Okay. And it is done the right way, the right pricing, and the right type of insurance. Okay. Again, you get with some of these insurance firms, this, David, probably better than anyone. And, they're just selling a particular type of policy. And how many times have you sat down with someone, and I'm not going to name some of these firms that do this, we know who they are, and they're so overinsured in this permanent life insurance policy, and they've just, so much money has gone down the toilet.
Yeah. Well, if the only thing I sell is life insurance or whole life insurance, it has to, like the minivan, that has to
Right.
look like it's the best solution for everybody, but it's not. So, and whole life insurance is a great tool at times, but when it's in the best interest of the client. And that's one of the things that we can do as a firm is we have a whole suite of solutions and we can
Mm-hmm.
simply offer the right one. And you know what? Sometimes even if it's not a product, it's, hey, Brian, you're a new client. We need to get you an appointment with an attorney so you and your wife can meet and have your estate planning documents in order, because that's part of a financial plan. It's not a financial product, but it's
Right.
incredibly, incredibly important.
Well, everything needs to be done under a financial plan. There's absolutely no doubt about that. And I'll talk a little bit about, so again, just let me finish out about the firm is that we're a fiduciary, we're very transparent, we're fee-based, clients know the fees that they're paying. It's not hidden or tucked away somewhere, or we're getting something on a back end. We've got these contracts. There's a lot of firms out there that have contracts with different investment providers, and that client might be paying a fee, but then they're also getting stuff on the back end there. We don't do any of that. Okay.
Mhm.
It doesn't matter to us what, security or anything like that. And the fees are disclosed. The other thing is the things that we do, the main things they're liquid. Okay. So,
Mhm.
a client can leave at any time. It's not like, well, sorry, you're locked into this, this deal. They can leave at any time. They can come and go. And we think that is also very important. But to get anything about planning, we do comprehensive planning here, as you well know, and we have a great process for that. We utilize a lot of software. We've partnered with other experts around this. Now, some of our competitors, like they might have an in-house CPA or an in-house, um, financial planner, or excuse me, not financial planner, in-house estate planning attorney, or an in-house CPA, or things like that. We don't do that because, in our opinion, the best CPAs and the best estate planning attorneys they have their own practice. They
Mhm.
don't work for a financial firm. And
Mhm.
so we've partnered with them to get the best unbiased advice for our clients. We quarterback it. And also we're not being compensated on that as well. Your
Mhm.
tax work, you compensate CPA. We don't make any money on that. Your estate planning work, you compensate them. We don't make any money on that. Again, it's transparent, it's unbiased, and we think that's the best way to structure a planning arrangement.
Yep. No, totally agree. So when I'm at a party or at a networking event, somebody asks me, "Hey, what do you do?" I say, "I'm a financial advisor." Almost always they'll say, "Hey, where are the market's going?" Or if I give you $100,000 right now, where would you invest it? And
Where would you invest it today? Yeah.
yeah, and my answer always is some version is I have no idea. I don't know anything about you. You might need to pay off debt. And a financial advisor does so much more than just manage money, but that's kind of the most
Right.
obvious part of it. So let's talk a little bit about how we manage money. I mean, are we buying
Yeah.
only Fidelity mutual funds? Are we buying only American funds mutual funds? Like,
Right.
talk about
Right.
our process.
Yeah, I mean, it's interesting you say like American funds, and there's a firm here in town that if you have an account with them, your account will be all American mutual fund, American funds. That's what'll be in the account. And that will be the majority of your investments, period, because that's what they have contractual agreements and things like that. So, no, we don't do anything like that. What we do is we manage money. First of all, it comes under the financial plan. It comes under what are the needs of the client. It comes under, what is the goals for the money, the risk tolerance, the time horizon, all those other things. Then what we do is we build that custom portfolio out for that client. Okay. We custody with big firms, Fidelity, Charles Schwab, TD Ameritrade. So, your money's actually held there, right? But we don't parallel never hold your money. All right. We simply act as an advisor on the account there. We manage the money there. We have a process. We do our money management in house. We have an investment team here. We have a process. It's called QRLT. Q stands for high quality. R stands for rules based, and risk management, which means we believe you got to have rules in place and managing risk. It's not, what we say a lot is it's not how much you make, it's how much you keep.
Yep.
And a lot of people you'll be at that same cocktail party you're talking about, like, well, I made 40% last year and do. And you know what? If you're not managing that risk accordingly, you can blink and that 40% is now could be a minus, it could be down to 5%. So risk is always up front. You got to start with good quality stuff. You got to put some rules-based risk management around it. L is liquid and low cost. You got to keep it liquid because you got to be flexible. You got to make sure you're low cost in the things that you have. And then T, tax sensitive, because you could, make a lot of money, make some great returns that year. But if they're all short-term capital gains, well, then, you're paying an income tax rate on it and you're getting destroyed there. So you have to be looking at the taxes as well.
Okay. And that's one of the parts of the financial planning process that it's very dangerous for an individual to kind of deal with tax loss harvesting. There's some pretty big mistakes that can be made, but that's part of what our firm does, what our investment management team handles for our clients. So inside of our portfolios, like what are we investing in? Like just generically speaking, are we buying individual stocks? Are we buying bonds? Are we buying what are we buying?
So our portfolios reflect where the client is. Okay. So what's going to determine that is the size of the amount of money they have. One thing too, when Anthony and I started this firm, is we do not have minimums. Okay. There's a lot of firms in town. Unless you've got X number of dollars, they're not sitting down and talking with you. We don't have minimums because we're simply looking for clients that are the right fit. Okay. And that it makes sense for us to work together. Because you may not have a lot of money today, but looking out and your projection and what you're doing, there's some great opportunity for you to grow wealth. Well, we still want to work with you. So we don't have minimums. So for smaller accounts, we will be using things like exchange traded funds and some mutual funds. Again, there's no sales charges or loads or commissions or anything like that in there. But we will use things like that because it's hard to build a diversified portfolio with a small amount of money. And then for larger accounts, yes, we have individual stocks. We've got some strategies that we do with bonds. Again, it just depends on what is right for the client. And we've got solutions to fill those there appropriately.
Yeah. And what about somebody who's maybe a little bit higher net worth and they want some investments that are not directly exposed to the markets? What do we have? What do we have for that type of clients?
Yeah, we've got really three different buckets for that. Of course, we've got fixed income, which, if we were having this call a year or two ago and I mentioned fixed income, probably half your listeners would just shut it off and say, okay, I'm about to go to bed now. Thanks for putting me to sleep. But the reality is fixed income is an asset class now that's come alive. The yields have roared back and there's really some great opportunity there in the fixed income space. So there's one. We do have a strategy. It is semi-liquid, I'll call it. It's called our endowment strategy, and it allows clients to participate in asset classes that aren't correlated to stocks. It's managed very similar to there was a very famous book about the Yale endowment and diversifying that way, and we have a strategy that reflects that. And then the third thing, so you've got public markets, okay, and everything I've been talking about to this point trades in a public market, but there's also private markets, and there's areas that you can get in there as well in the private space. Now, in the private space, I will say, and we disclose this up front, there is no liquidity. I mean, when you commit to this, you're committing for 5 years, 7 years, whatever that time frame is, but it allows you to participate in asset classes that aren't correlated with stocks. Okay, it could be industrial space. It could be, it could be a particular industry group like the defense and,
Sure.
group,
Yeah, we had storage buildings last year.
Whatever. There's real estate, there's industry groups, there's things like that you can participate in that, you're not carrying those correlations.
Sure. Now, in due disclosure, some of those require pretty high net worth, $2 million, $5 million net worth. So, if that's something that interests you, you could always get with me and we can see if it works for you. But it's a really strong offering that we're able to have to help our clients to be diversified in their holdings. So that's really really interesting. So let's talk as we kind of close down a little bit more about our financial planning and some of the issues that a good financial plan should address in a client's
Right.
life.
Yeah, no, that's a great question. We have a planning process. We call it the Spark process. Okay. And I'll go over that as well. So S stands for simplify. Because when most people come to us that are in need of a plan, they're like, well, I've got this stuff over here, I got this stuff over there, I got
Mhm.
this happening. I'm not sure about that. And my benefits at work and all this other stuff's coming up. Well, let's figure out a way to simplify and really bring this down and make it simple for you.
And we
And
have
and
like a
so
one-page sheet that's called an asset
we
map that
yeah,
shows you a really visual representation of where your assets and debts are, and
right.
it's eye-opening. It's really cool.
Yeah, so that really is step one. Like let's simplify and let's get your picture here in a way that you can digest it and see it. P stands for protection, and again, I wasn't poo-pooing insurance earlier. I'm just saying insurance really needs to be done the right way, and
Mhm.
unfortunately, most people in this business don't do it the right way. They do it to a way that compensates them the most,
Sure.
but it's not necessarily right for the client. So that's the protection piece. We want to make sure that your assets are titled correctly, okay, that your beneficiaries are set up correctly, that you've got the right insurance in, that things are protected the way they need to be protected. So that's P. A stands for accelerate, and accelerate is the actual investment piece, which we just talked about. We want to make sure you are invested to grow and grow your wealth over time. R is reach goals. And now this is where we actually get in and where a lot of software helps us, where we're able to actually create a roadmap for you that shows you here's where you're at today, here's where you want to be. And so what are the things? And then we build in all those things in there, right? Could be, college for the kids, weddings, vacation home, whatever those things are. We build all that into the plan to make sure that, when you pass, let me rephrase that. You don't ever want to outlive your money.
Sure.
Okay. And
Yeah.
so you want to hit those goals. So reach goals. And then K is knowledge. We're
Yeah.
constantly educating. We're constantly, putting things out to educate folks on what's going on. So that's our planning process.
I love it. And I always say that it's not really about the money, it's about what the money can do for you.
Right.
So you had a dream to become a pilot, and obviously planes aren't free, so you have to have some money to make your dreams come true. Kids don't go to college for free. So we
Right.
have to have goals, and many of our goals, not all of them, but many of our goals do take money to achieve. And I always talk, and this is why I'm so passionate about what we do, is how we handle our money should positively impact our lives and the lives of those around us. So I have had some ultra rich clients and friends that were some of the more miserable people I've ever met. They
Mhm.
had money, but they weren't handling it in a way that enhanced their lives. So, and I
Yeah.
think we as a firm, we really try to help our clients to live better lives by how they handle their money, which is an awesome thing. So cool
Absolutely.
thing. So my last question, and I didn't tell you that I was going to ask you this one, but every guest gets this question, so you're not going to be any different. So we're the Weekly Wealth Podcast, and we talk about the mindsets, the tactics, and the strategies that can help you to build and maintain wealth. So Brian Bogner, tell me, what does wealth mean to you? What does wealth mean to you and your family? What's your definition of wealth?
Wealth simply means to be able to do the things that you want to do when you want to do them, where you want to do them, and with the people you want to do them with.
Mhm.
And that's wealth. I mean, when you say money is a tool, it really is. And there are people that are motivated by more money, and they want to see more zeros in their bank account, and they want to see more, and that's their motivation. But it really needs to shift to money is that tool that allows you to do what you want to do, when you want to do it, where you want to do it, and with the people you want to do it with. A lot of W's in there,
Mhm.
wealth, but that is what I would define it as.
So you're probably the 80th or 90th guest that I've asked that question, and nobody has ever said, when I have a million or 5 million or $10 million, I'll be wealthy. Everybody gives some version of freedom, which is basically
Yeah.
what you just said
Yeah.
was freedom.
Yeah.
And that's what money does. So let's handle our money the right way. Let's give ourselves enhanced lives. Let's have more freedom. So before we wrap it up, you talked about knowledge, and I wanted to hear a little bit about some of the content that you and our chief investment officer, Greg Towner, put out.
Sure.
It's really, really interesting. As I mentioned, the Weekly Wealth Podcast is a podcast that helps you enhance your financial life, but we don't always talk about traditional financial planning topics. Every once in a while,
Right.
we'll talk about the
Right.
new IRA rules and things like that, but we're talking not about what the markets are going to do. You actually have a show that talks directly about the market. So where can we find
Sure.
that, and tell us about that?
Yeah, it's on. It's on all the podcast apps, I guess you could
Mhm.
say.
And we'll put a link in the show
Uh,
notes.
it's called the 20-minute market breakdown. Okay. And so on the 20-minute market breakdown, it's a 20-minute podcast with Greg and I where we break down what's really important, what we're seeing right now in terms of the markets and the economy and things like that. Matter of fact, on Monday, we just recorded. Everybody's talking about this banking crisis right now, or I'm gonna put in quotations crisis,
Mhm.
because we're not convinced it is as a crisis as the media, of course, is leading it to believe. But we talk about it. It actually, that episode was special. It only lasted a little over 10 minutes, but we just focused on that. So sometimes we will put out special episodes if it's really there, but it's 20-minute. And then, so that's on the podcast, all the podcast apps. You can always go to our YouTube channel, just
Mhm.
Parallel Financial. If you just go on YouTube, type in Parallel Financial. Another show we do is called the 5-minute market. Excuse me, 5 charts in 5 minutes. And that's a very quick, it's visual. You need to watch it, where we go through 5 charts in 5 minutes. And we're just, again, these are like the real important things that we're seeing right now. So we try 5 minutes, 20 minutes. That's kind of, what we say, and where we try to keep our shows at. But yeah, definitely check it out.
I love it. And one of the recurring themes that you and Greg always talk about is avoid the noise.
Oh
All
my
the media
goodness.
outlets, their job is to get viewers, and what gets viewers? Bad news. And
Right. Yeah.
and you and Greg would not have any, and you have spoken about negative trends before, but you don't have to make everything negative in order to get viewers. You're just really acting as a fiduciary and calling it as you see it.
Yeah. I mean, really, if you could just turn off the news, we tell this all the time. Look, when Greg and I, our CIO, Greg Towner, and I, we started the business together. We were on this big trading floor, and we had TVs of CNBC just all over, and you're working, and you just had CNBC in your face all day long. I, I can't, it's been years since I've watched CNBC, and Greg will tell you the exact same thing. Years. Okay. Because it's entertainment. It's news entertainment. It's not real news. And so people watch this stuff, and they get in these high, and these are designed to elicit an emotional response. And then what's the worst thing you can do? The other thing you hear Greg and I talk about a lot too is, if you let emotions drive your money decisions, it is a recipe for disaster. That's why when we talk about rules-based in our investment strategy, that eliminates the emotions from taking over. Because when you make emotional decisions, we think we make very rational decisions with our money. No, we make emotional decision, then we justify it with some logic that we've come up with, but we're making emotional decisions, and that never works out well.
Yeah. And that's why I love the structure of how our firm works. I personally am not managing portfolios. So our investment management team manages portfolios, manages our clients' money. I'm working with the investment management team to kind of coordinate which portfolios, which
Right.
strategies. But I'm a quarterback, so I'm just helping my clients to live their lives the way they should live them with how they handle their money. And then we have a team of people they're literally following rules on how they're going to invest money, and emotions are taken out of it, and it's a beautiful, beautiful thing. And I've seen a few friends of mine that when the markets went down last year, they got all their money out of the markets because they watched the news and the country was going to collapse and blah blah blah. Well, that hadn't worked out really well, and we
Mm-hmm.
have a process on how we handle money that takes the emotion out, and we just tend to have really good, steady kind of long-term results. We don't always make money, but
Right.
we have steady results which are not based on emotion.
Yep.
So Well, awesome. Well, I'm glad we got this episode in. I really appreciate your expertise, and I appreciate just what our firm does for our clients, and really proud just to be part of. I call us a big, small firm. We're not a huge national firm that has to answer to stockholders and everything else, and
Right,
we just do
right.
what's right. So we just, I feel like we do a really, really good job for our clients. We have a great team. We actually have an ex-pro baseball player as a financial advisor. We have an attorney who's an advisor. We have an ex Division I college level cheerleader. You and Anthony have been around, and we have a great administrative team. So we really, really,
Yeah.
it's just a really
And,
good
and
situation.
and as people can see, we have a bald guy. We have
Yeah.
a bald guy on the team.
Well, yeah. Well, and another guy that's going to be bald pretty soon when he takes the final plunge. So,
Yeah, no, we've got a great team. If you go to parallelfinancial.com, you can click on about us or meet your team, and you can read about us. But obviously, you got to have great people. You got to have a great team. We've been very, very blessed, and we've got amazing people here. So we're very thankful for that.
awesome. So, hey, everybody, check out the 20-minute market breakdown, Brian's podcast and YouTube show. We'll put the links in the show notes. And until next episode, we wish everybody a blessed week. Thanks, Brian.
Thanks, David. We'll see you.